All right, guys, today we are going to watch a news video about the economy. I think it's one of the skills you need to learn to be what I call a sovereign individual. And sovereign individual freedom is being able, to exercise freedom. And the only way to do that for my athletes here is you need to understand how economics works and how it affects you. This particular video is going to talk about how the dollar is being debased. These are the type of videos I watch, and I just wanted to hang out with you guys, with the audience I have. And I'm just going to watch this since I'm planning on watching this. I haven't watched this video yet, but this guy, I like to give like a C+ rating when it comes to how I feel about his news. But I think one of the great things about this guy is the fact that he views the economy with a British lens. This is an American news individual. It is someone from Britain who is looking at it from the outside. So the insight and perspective he has is very valuable, at least to me. So we're going to check out this video. Just wanted to say that and let's see what we can learn. This is the dollar implosion begins as Washington triggers debasement. This is some of the stuff I've been talking about.
And it's actually been engineered by the US government and by Washington themselves. And there's a growing narrative suggesting that this is the result of moves by China or Russia or India or even Saudi Arabia and some other smaller global south countries like Brazil as well. And whilst there's certainly a concerted effort by countries of the global south to try and end the dominance of the US dollar, actually, it's not very advanced, it's not very impactful, and they aren't putting that much effort into it. And the impact of the US government's policy is far, far more influential in the de-dollarization and the decline of the US dollar that we're seeing right now.
This is how the debt, this is how they're going to pay the debt.
We're going to cover the recent updates to the US dollar's weakness, and we're going to look at how this is actually largely influenced by the US government themselves. Let's start off with this chart here showing a pretty steep, aggressive 1% decline in the US dollar from a few days ago. The US dollar tumbles to a fresh 4-year low after President Trump says the US dollar is, quote, doing great, and he's not concerned about its decline. Now, what really happened is Trump was interviewed and he was asked about the performance of the US dollar, about the fact that it has actually fallen in value by about 10% over the last year or so. And the result of that interview was this, a 1.5% decline in the value of the dollar over the course of about just 5 minutes, which is a massive swing when we're talking about currencies. So what exactly did Trump say to cause that massive move? He literally just said the US dollar, the value of the US dollar is great. It hasn't been performing badly. It's doing exactly what he wants it to do, essentially. And after seeing a 10% fall in the value of the dollar since he came into office, it makes a little bit sense why markets are now rushing to sell the dollar on that statement, right? That has led it to be its weakest now, the dollar, since it has been since 2021, about 5 years ago. Why? Simple. Because this shows that Trump is willing to tolerate a very weak dollar. And actually, maybe he even wants it weaker than it already is. And the numbers and the data, they actually support this idea as well. Here is the US dollar spot index over the last year. You can see
I agree too.
Oops. You can see there, right? A very, very distinct decline from 108 on the index last February all the way down to 97 before. And right before then, it was even a little bit higher as well. A decline of about 10% over the last year, leading to the dollar being its lowest valued in the last 5 years, essentially. And the markets are actually expecting it to get worse. President Trump's relaxed tone about the dollar sell-off is fueling speculation that the US currency is at the start of a longer-term decline. Bloomberg's dollar gauge slid as much as 1.2% as the comments sapped the appeal of the greenback and US Treasuries, boosting what has been known as the debasement trade. This may very well be the beginning of the next leg lower in the dollar, and many may not be prepared for it, coming from a former Morgan Stanley currency strategist who developed the dollar smile theory, which we'll get onto in a moment. There's been a generation of currency analysts accustomed to dealing with a strong dollar and a strong US economy, and they're unable to process the scenario of a weakening dollar and a US strong economy. So what is the dollar smile theory? Really simple here. Basically, the US dollar, supposedly according to this theory, which I'll explain in a moment why I don't agree with it anymore, the US dollar performs well at two opposite situations. The theory is that when the US economy is strong and they're enjoying, for example, strong economic growth, strong GDP numbers, investors, they want to invest heavily into US assets, like US stocks, thereby increasing the demand for the dollar, and so the value of the dollar rises when the American economy is doing well. When the economy is booming, the US dollar rises in value. Conversely, though, on the other end, in risk-off environments, when the US economy is struggling, well, it's very rare that the rest of the world isn't also struggling in that instance. Well, then investors, they flock to traditional safe haven assets like the US dollar and US Treasuries, and the sheer demand of all that foreign investment will again drive up its value. So that's two extremes being up. And then we have the middle, which gives you that smile shape. And so in the middle of those two extremes, the theory posits that the US dollar will fall in value if US equity markets struggle to perform well relative to other global markets. So say the DAX or the Nikkei or the FTSE, if they perform better than the S&P 500, for instance, well, investors, they're going to be pulling money out of the US dollar into those other currencies, and so the dollar will fall in value. The problem with this theory is that the person who developed it is now suggesting we're at that trough at the bottom of that dollar smile right now. But this was also developed 20 years ago when technology, and now AI as well, wasn't really a massive asset class as it is today. Tech companies, the biggest tech companies in the world in 2005, they were all oil companies or telecoms companies or pharmaceutical companies, which, yes, the US was always strong in those industries, but nowhere near as dominant as they are with tech today. And there were British telecom companies, and there were European telecom companies and pharmaceutical companies and oil companies, which meant the US wasn't as dominant in the global equity market. Now we take a look at the global equity market today, and the 10 most valuable companies in the world, they're basically all tech companies except for Saudi Aramco, which is just Saudi Arabia's state-run oil company. So the dollar smile theory was developed when there were still high-performing, innovative, exciting businesses in Europe or Asia with good growth. But nowadays, Europe and the rest of the world, they basically don't have a tech scene at all. Some people would say that China has a tech scene, but not really. They don't have a tech scene because they're talented or special, or they have, healthy capital markets. They have a tech scene because it's illegal for an American tech company to exist and operate there. And so they have their equivalent clones, Amazon to Alibaba. And so the idea of the dollar smile theory, that US public markets are underperforming other countries, it's kind of almost impossible at this point. And unless there's a massive recession, it's just not going to happen because there is no growth or no innovation anywhere else in the world. Now, sorry for that little digression there, but this will make sense in the end. Now, this might seem like a bit of a tangent, but stay with me for a moment. Have you ever wondered what would happen if the Olympics didn't even try to stop doping? I mean, it's an open secret that all the top athletes are on performance-enhancing drugs, but they spend most of their time just trying to hide it. Well, this video's sponsor, Enhanced, are looking to answer that question.
All right. No offense. One of the things I don't like that he does is he loves to promote certain companies, and the thing is, it's a money grab. It's one of the things about him that I don't particularly like. He always talks about stocks. Now, one of the things I will say, it at least brings awareness to it. So being able to look up this stock yourself, look at its financials. Now, this is a very advanced type of thing, but if you want to learn to invest, I would take this as a lesson of it. He is promoting, okay, I'm gonna allow him to do his ad so we can learn here. See.
It's backed products and a
okay, let's bring it back. All right, I will allow this ad to play, but we can use this as an example. he's going to promote it in hopes that you buy it, and I'm sure he gets a commission on the back end. You can very easily get burned, so you must take this with a pinch of salt, not a grain, but a pinch. You have to take this with a pinch of salt, because investing is inner value driven, as in your time horizon could be different than his. So once again, what's a good investment to him isn't a good investment for you necessarily. So it's very important that we don't fall into this trap, but I'm going to let it play so we can learn to discern what's a good investment for us and what's a good investment for him. Okay, so I think it's very important to know that, because a lot of these things, there's a lot of information out here that people are looking to take advantage of, and this includes him as well. But I still value his opinion because of the fact that he's from Britain. He looks at our economy in a much different light than how people here will analyze our economies. But this is good information to understand, so you know how to approach business as you go moving forward. So I'm gonna continue the video because I like this video personally. So
Well, this video's sponsor, Enhanced, are looking to answer that question. They're currently trading on the NASDAQ under the ticker symbol APAD, and they're building a global platform that combines elite sport, rigorous science, and medical oversight to explore how human performance can be safely enhanced. The Enhanced Games will be a global annual competition focused on safe and transparent enhancement that delivers fair competition and record-level athlete compensation, even more than the Olympics. But Enhanced also have a consumer focus, helping people optimize their health, performance, and recovery. They're offering science-backed products and a consumer health platform to expand beyond just athletes. A quote from their CEO that I think characterizes this perfectly: all people should be able to live in harm, from amateur athletes that train for a triathlon to grandparents that want to play with their grandchildren at the park. Enhanced recently closed a $40 million equity private placement.
One of the things he does
Enhanced Games is set to take place in Las Vegas in May this year, with some world-famous athletes like Thor Bjornsson, the world's strongest man, and a load of different Olympic champions like you can learn. Of course, do your own due diligence, and I'll leave a few links down below in the description with more information for you to take a look at.
But if you ever want to do research, this is how you do research on companies.
Now back to the video, and if the US dollar isn't falling because US equities and companies are underperforming, because, well, they're not underperforming, are they, over the last year, then why is it falling in value? Well, two things really. There's geopolitics and debasement, and they both sort of work alongside each other as well. Trump wants a weaker dollar, right? Because it makes imports more expensive, because it makes exports cheaper and more competitive. And Trump wants to drive a massive reindustrialization of the United States. He wants things made in the US, sold to the rest of the world to promote jobs in the economy within his country. And a weakening American dollar, that makes American cars more competitive overseas and foreign cars sold in the US less competitive. Now, the same goes for drugs and for pharmaceuticals and for everything else as well. And there's been this massive push. This has been a massive push of Trump's administration in every aspect, from minerals and resource extraction to oil production and pharmaceuticals and auto manufacturing, literally everything. And it ties in incredibly heavily with Trump's tariff programs as well. Sure, often, these have political aims as well. For instance, Trump used tariffs to ensure that the Colombian government accepted deported illegal immigrants and criminals, as an example, and he threatened tariffs on Europe over Greenland. But this all has elements which promotes his weak dollar as well. It's also worth noting that, a weak dollar to boost your export market isn't rare. China has pursued this policy for decades, artificially weakening their currency to boost their manufacturing base and their exports. Now,
the problem is, I will say, it does hurt the little guy, and we experience this through inflation. And that's what I'm probably he's going to say, but even though that is true, the tariffs, when it comes to and this is my opinion at the end of the day, but the fact of the matter is that even though tariffs, quote unquote, don't work and it hits the customer, etc., tariffs' job is, well, because this is propaganda what these corporations do when it comes to tariffs. what you're hearing on the news is, well, tariffs is making everything more expensive. And yes, that is true. It is making things more expensive because our company in America has to pay the tax. So the tariffs is paid by the US company, which in turn drops it down to us through passing on the cost. Now, here's the thing. They can do that all they want. And this is what people don't understand about economies. They can do that all they want. Is price going to go up? Yeah. But it doesn't mean you have to pay for it. That's the difference. If you stop paying for it, guess what you're going to have to do? Can't import those things anymore because now there's no demand for it. So now you are forced to manufacture here. And that's essentially what he's trying to do. He's trying to, now it's going to take a long time. This is 5 years, 10 years, which is why you're having so much trouble now. You're hearing in the news, oh, well, construction jobs are going down too. That's why tariffs aren't working. No, the reason why that's happening is because if you are a massive billions and hundreds of $billion company and you are asked to invest into a state or a government or a workforce, is a 5, 6, 7 year plan. I'm literally watching this now where a Homer City project here in Pittsburgh for them to build their data centers. Like, our expectation in our industry is this thing gonna be finished for at least 5 to 6 years. That's the time horizon. People think too small. You're thinking too short term. But propaganda is made to make you think short term. At the end of the day, all this stuff you're seeing is going to take years, possibly decades to play out. Now, what's that going to do to these companies? It's going to hit them where it hurts most. You either have to invest in this country to build a work base that could potentially create more jobs, or you can keep trying to import stuff and pay the tariff and deal with that. Now, overall, once again, doesn't mean it's completely good for us because we're going to experience inflation. We're going to experience unemployment for the next 3-4 years. But for the most part, when it comes to macroeconomics, geopolitics, it is the winning move, especially when war is over the horizon right now. You want to build a strong manufacturing base. You can't be like, this is geopolitical warfare. This is what you're seeing. You're seeing the quote unquote Cold War of it all. First, it's economic, then it's espionage, then that's why they're trying to get minerals. And actually, I do agree in the geopolitical space, makes sense. In our country space, in particular states and particular cities, into particular communities, could be completely different. And I do think, especially over the short term, there's going to be a massive wealth gap that's going to happen because of the inflation. Because the people who are poor don't own assets. So you're going to get hit the hardest. The people who own the assets with the devaluing of the dollar, they're going to gain, quote unquote, more wealth.
Other countries, in particular, foreign governments hold huge degrees of foreign reserves, mostly in US dollars, or used to be mostly, not anymore. We'll get onto that in a moment. And foreign investors, again, in particular central banks, they worry about the US dollar being weaponized against them. And so that drives money out of US markets, pushing it down US dollar values and pushing money into assets like gold instead. And we can see this here, this brilliant graph from Bloomberg showing the black line, which is foreign governments, foreign countries holding treasury bonds or yields, sitting at around about 4 trillion over the last decade or so, not really changing too much, but a massive uptick in foreign reserves held in gold over the last year, tying in very, very nicely with this debasement trade idea, and also the massive gain in gold values. So how does this tie into the debasement trade as well? Well, foreign investors, they're getting rid of their sovereign debt, or rather they're not expanding the use of their sovereign debt for fear of it being devalued through inflation. Now, it's hard to differentiate how much of this change is driven by geopolitical fears of being attacked by tariffs from Trump and being, exposed to those tariffs or those attacks more because you hold a lot of US dollars, versus the inflation or the fears of the US dollar being inflated away in value. But the outcome is actually essentially the same.
Yeah.
Evidence is mounting that the debasement trade is taking hold as a long-term investment philosophy. Going into 2026, family offices and retail investors were already looking for more creative ways to hedge their equity holdings. The classic 60-40 portfolio model, 60% in equities, 40% in bonds, where bonds serve as a cushion against stock sell-offs for when the economy is bad, that failed to work during the 2022 post-COVID downturn, with global stocks at record highs. The need to protect against sudden shocks is only growing stronger. Last week's bond market rout reinforced the view that 60-40 is broken down. There was again no flight to safety. Treasuries didn't rally, robbing equities of their traditional shock absorber. As such, strategists have been proposing alternative portfolios. The so-called 60-20-20 model advocates that investors sell half of their fixed income investments and put 20% into precious metals, led by gold. This could in part explain why gold is holding above $5,000 an ounce over the last week. So who's actually going to benefit from this proposal, from this policy? It's going to depend a little bit on if Trump's plan works or not. If the debasement trade or if geopolitical fears go too far for the US economy as a whole, well, the US economy could really suffer. The main benefit of the US dollar as the world reserve currency essentially means infinite money printing, right, of US dollars without actually having infinite inflation. The US runs the single largest deficit in the world to ridiculous levels of spending compared to taxation. And this massively helps the US economy, of course, because it's pumped into the economy. And they've done that for the most part, of course. The post-COVID spike in inflation being an exception. They've done that for decades without having huge degrees of inflation. Now, if the US dollar loses its world reserve status, it can't do that anymore. Inflation would be rampant as, in layman's terms, all of those US dollars being printed, they'd stay in the US economy and impact prices there, whereas whilst it's the world reserve currency, a lot of that money just goes out of the economy, out of America, and it doesn't actually impact inflation. If all of this goes to plan for Trump, though, well, the US dollar, it loses a little bit of value steadily over time, but not too much. Tariffs bring in huge revenue for the US government. The US dollar remains strong as the world reserve currency, and the US deficit can continue to run at its ridiculous multi-trillion-dollar level. And the benefit of it working is the US becomes a manufacturing and an industrial powerhouse again, on top of being a tech and an AI and every other kind of powerhouse as well. And it becomes a net exporter all around the world. The US economy booms and everyone in America basically wins, right? Higher wages, higher business profits, higher asset prices, you name it. If, however, the opposite happens, if debasement and that trade takes control and it all goes wrong, well, American corporations will probably be fine, right? They're mostly global and international. They aren't actually that dependent on the US economy anymore. But the American people will really pay the price with far higher costs to all of their imports. And if there are no domestic alternatives, if that second industrial revolution doesn't come to the United States and they aren't able to create these domestic alternatives, well, those costs of imports, they'll be borne by US consumers, not by foreign companies. That's a very, very tight rope to walk across, and it's not easy to get it right. And though so far, actually, it does seem to be going okay. Now, if you want to stay up to date on the markets, on financial news, I'll be releasing videos like this every single day on this channel.
I like this guy. Like I said, he has a very unique perspective because he has a very unique perspective because he's British. So him seeing it outside of the United States gives him a special insight that I value, which is why I watch his videos. But ultimately, why do I watch this video for you guys? Well, it's because you need to understand what's coming. As an athlete, you must be aware what's going to happen to the wealth you are asking for, because most people are asking for US dollars when they're getting paid. So when you're getting paid US dollars, you need to understand how you can use it, manufacture it, and I'm talking, but ultimately you have to know what you need to do in the value you hold. And as it loses more value, it should change your perspective on what you're going to do with your money. Now, just like he said, one of the best things to do now is to buy gold, is to buy what? the first thing to do is to invest in yourself. That's the number one investment that people should be doing if you want to get out of this situation. You got to invest in yourself, invest in your skill set. And once again, this is why I'm a big guy when it talks about learning the trades. You're like, well, the trades won't be there if everyone goes. It's not about the fact that there might not be jobs. Yes, over time, it is cyclical. Eventually, there's going to be too many electricians and I'm going to be laid off because there's going to be less work and more workers. Yes, that is true. But you will have the skill set to go to business for yourself, to work on your own home, to be able to live, quote unquote, outside the grid because you know how to wire something, you know how to build something. You have the freedom to do what you want and live outside the system if you need to. That's why I am a big proponent on the trades. One trade can put you in a position where you can meet people who can essentially all build a home for you. So that's what you want. You want expertise with your hands. It's always good to have some things when it comes to university, IT. I do IT, that's what I went to school for, but I'm going to an electrician trade as well. I want to be able to do with my hands, a skill set that I can have that doesn't matter what the dollar does, valuable. So I can always barter or trade for it. That's why I'm a proponent of it. So hopefully you learned something with this. Essentially, your dollar is about to lose a lot more value because of the United States debt. Of course, as he mentioned, Donald Trump does have a plan on what he wants and hopes to do for his legacy. He already knows his ego, but how it will affect us, this is how it's going to affect us. You will see prices going up over time. You're going to see inflation. You're going to hear the media propagandize it to fight ideology politics. We're not here for ideology politics. They're doing that so you miss out on this. At 10% of the value of your dollar is about to go away again. And then they're going to benefit. That's the whole point. So great talking. Hope you learned something and I'll see you next time.